Good afternoon. This is Paul Harris for Kitco News at the BMO Global Metals and Mining Conference. I'm joined this afternoon by Paul Benson, President and CEO of SSR Mining. Good afternoon, Paul.
Good afternoon.
The gold price has been on a tear the last week or so. It must be good as a precious metals producer to finally be able to get some good margins, some fat margins. How important is it for companies, gold producers, to have some time with good margins?
I think we all enjoy it. I think it's certainly a relief for quite a few companies, but from our perspective, we've been generating cash for the last 4 or 5 years and adding cash to the balance sheet. Obviously what it does, it expands margins. The risk for the industry is that then takes the pressure off to a certain degree. So I think management teams have to be cognizant of that and make sure that you don't allow that to occur. And so really important for us to make sure we focus on margins and see margin expansion. Prices going up, you actually want to see the margins now expand rather than what's happened in the past where costs tend to rise as the prices go up.
So that's maintaining the capital discipline as well?
Absolutely.
Okay. We've just been through the results season, and a lot of precious metals companies have been announcing dividends for the first time. A lot have been increasing their dividends. So returns to shareholders seems to be a growing theme. How is SSR Mining reacting or evolving in that space?
Yeah, it is an evolution. We haven't had a capital return to date. We've focused on building our balance sheet, and I think we've got the best-in-class balance sheet of the intermediates. At the end of the financial year, we had $504 million US in cash. The debt is via a convertible note. So we've been wanting to do that. We've seen cash as very much a strategic asset. So in this environment, the TSX isn't working efficiently for smaller companies. By having the cash balance we have, we can enter conversations with anyone, whether it be a major looking at divesting a mine, down to a junior who's looking for exploration funding. So rather than give it all back to shareholders and then have no competitive advantage, we've focused on building up that cash balance. We also had a study we were doing down at Marigold, where there was a large resource that we knew we should be able to convert, but we didn't know whether we'd need additional capital. The risk was we might have to expand the mining fleet. And we've said to our shareholders, we'll make that decision at the end of last year, beginning of this year. We've got through that. We've converted 800,000 ounces to reserves. We don't need the capital. So that's taken a potential sort of use of capital off the table, which is great. This quarter will pay off the old convertible note, $115 million. So I think by coming mid-year, that will be a conversation that we will be having at the board level about looking at starting that capital return to shareholders. But we'll make sure we maintain a big enough buffer so we can pursue opportunities. That is a competitive advantage.
SSR Mining has grown through some very shrewd acquisitions and then investing to really get the value out of those acquisitions. Is that still the game plan?
Absolutely. To me, I say in mining in our space, strategy is dead simple. The only hard part's the execution. There are only two ways to add units: is either buy them or find them. Unfortunately, all the studies show that both greenfields exploration and M&A destroys value. So you then say, how can we do this efficiently and create value? And it's really driven by discipline. We are incredibly disciplined when we look at opportunities. And our sort of mantra internally is it's better to miss a good opportunity than to buy a bad one, because bad M&A can destroy a company. So we are very disciplined. I think since the investment since we took over Claude in 2016, I think we've looked at something like 14 or 15 opportunities in detail, so under confidentiality agreement. Yeah. And the only two that we moved forward on was the investment in Silvercrest and the acquisition of Trenton Canyon, the block south of Marigold. Everything else we said no to because we couldn't see value for our shareholders. So we're not going to buy something just to increase production at the headline level. There has to be value for our shareholders. We may have missed an opportunity. We may have said no, and obviously with rising gold price, in hindsight, it may have been a good decision to say yes. But again, the risk-reward balance we have to focus on.
It was the right decision at the time.
Yeah.
ESG is becoming an increasingly important topic of conversation, increasingly prominent aspect in results statements and reporting. How is SSR Mining embracing that, and how are you looking to bring that or have that as a more important part of your business?
Yeah, I'm very pleased to say, we're not late to the party. We've been focused on that for a long time. And if you look back through our presentations, go back 2 or 3 years, we've had slides in there on that aspect of the business. And we've had quite a few of the big fund managers say we're the only company in the intermediate space that ever looked at it. ISS, the proxy advisors, one of the rating agencies, they score 1 to 10. 1 is best, 10 is not. We now are in 1 for S and G, so social and governance. We score a 1, best in industry performance. And if you look in our presentation, it's at the front of the presentation, it's not hidden at the appendix, but we add the 3 up, and we are the equal second out of the peer group that we consider ourselves to be part of. So yeah, something we've been doing for a long time. We totally believe in it, we understand it, and we'll continue to get better at it.
Okay, so what would you say is your real strategic focus for this year, and what do you hope to deliver this year?
Really delivering on what we say we're going to do. So again, I think we are unique in our peer group. We have met or exceeded both production guidance and cost guidance for 8 consecutive years. No one else in our peer group can say that. And that's important. So delivering on guidance is sort of number 1. 2 is continue to grow the resource base. At both CB and Marigold, we've continued to offset depletion. Our discovery costs at Marigold are under $20 an ounce, at CB under $30 an ounce. And this year will be record exploration expenditure across the 2 assets. We're spending $12 million US at both Marigold and at CB. And the aim is to continue to grow the resource base and then convert resource to reserves. And then continue to look for new opportunities with that caveat of we'll be disciplined on how we do it.
Excellent. Well, I wish you all success. Thank you very much, Paul.
Thanks very much for having me.
And thank you for watching. Stay tuned to kitco.com for more from the BMO Global Metals and Mining Conference.